Alright guys, glad to have you on board again. Today I wanted to give us a kind of a shot on the global market review on those flow timeframes, even though technically speaking not that much has happened since the last time we talked to each other, but I think I start to see a lot of mismanagements and lots of psychological assessments, very dangerous ones though. So I would like to once again use rough technicals, rules that have been hard-coded and hard-written, black on white, that explains the statistical trading that I try to teach you. And then of course always remember that you have some rules. Those rules are clear. There's no subjective analysis out of them. You just need to get them, verify, and apply. Remember, verify is very important. It's nothing like trust the guy who just says so. It's really take on the rules, review them, replay on many different types of assets or asset classes, try to get a grasp of the actual statistical occurrences of these things. Don't try to just follow someone, get to learn, get to appropriately verify yourself. Okay, always take on that assumption. It's essential. Okay, the next thing out of this is that, like I said, there is psychological pressure on every human being, and we know those two biases. There's the fear of uncertainty and impatience biases. So that means whenever the market is too messy or whatever, you try to blend in any sorts of external stuff to just try to diminish the level of fear by raising your level of confidence. So most of the time, you're just going to go over any possible type of information, social media, whatever shit like that, and you're just going to try to blend it in, to try raising the level of confidence. Remember, the market is chaotic. There's no way for you to ever control it with any such a thing as news flows or whatever confidence shit you would have by listening to a YouTuber of some sort. One and only one thing you should be trusting on aside chaos is accept it and just try to frame it. You need to have a set of rules, clear rules, that's going to frame what you do out of chaos. What can you do? What can't you do? And anything you try to do which is not authorized by this risk management framework is bullshit. Okay? And that's all you need to figure out. That means it's also very subjective. That means what you think is bullshit might not be what something else think is bullshit, because we all have different strategies out there. So number one rule, don't listen to anyone else who doesn't apply the same strategy as you do. Of course, remember that you need to learn that strategy and verify it yourself. It's not trusting someone, no such a thing. That is just guru trading, and you don't want to fall into this. The set of rules need to be clearly hard written and be verifiable by anyone out there, and yourself first. You don't trust me, you verify. Okay? It's essential. Now that we've done that prerequisite statements, let's go down here and try to explain the mismanagements that I've seen. So remember, the technicals are pretty much the same as they were last time we spoke. So nothing new in here, and if you are very confident now, you don't feel uncertainty or impatience, you can very well skip on this one. I just think that I see way too much of it, so I would like to restate and remind some of the technicals that I see some people misleading their judgment upon. Okay? So here we are, just roughly, basically reassessing the strategy basics on the assets which I think are under huge mismanagements. First one, the S&P 500, and then the cryptos. So S&P, remember the stage which we're in, we had a third flow. It's in the massive monthly time frame in here, which we've made new all-time highs. So now the flow sequencing is this monthly background secular trend, okay? Though we have a flow sequencing in 4-hour charts, and we have terminated the set of 3 flows, which means we're at that stage. We have 1, 2, 3, though we're going to get 2 consecutive bearish flows. Did we already get the third range boundary? The answer is yes, and that's where we needed to take profits. It's not like, yeah, maybe take profit and let the rest ride. It was really take the 100% profit. This is where it happened. So in here means this third flow is where it's done. It's where you stop trading it. It's where you take your profit, get out of it. So that means whatever happened next is none of your business. You couldn't trade it. And I see so many people saying, yeah, but the market is making gain and I don't. And it's been lasting for so long. Yeah, but fuck it. Man, I mean, there's no way this is ever written down in a strategy. Like what you feel in here is a set of emotion. You fear of missing out. You feel like the others are making gain and you don't. This is emotion. This is psychology. This is not related to technicals. Technically speaking, this is where you stopped. Whatever happens next is chaos to you. And there's no way you can rationally say it. The reasons why the market going high or whatever is all sorts of fancy stuff that you're going to blend in, which is not part of the strategy. The strategy was clear. This you could trade, this you couldn't. So whatever happens next, let it behave, okay? What happens next is I see some people saying, Phil said that we can trade the third range boundary. Yes, and I definitely stand for this. If we have the reversal of the context and we have another third range boundary, this one you can trade. Okay, so long as it doesn't squeeze, because that's the reason why we didn't trade that one. We took the profit but didn't trade. This one you can trade, only if it doesn't squeeze out. Okay, so that's all there is for now. But some people say this is a guarantee, like we're gonna get this third range boundary. I've been waiting for so long by this market making nice gains without me, so I'm gonna definitely sell the fuck out of here. Yeah, so that means you've been left aside and now you want to get in harder. That's the second mismanagement. That means you're going to probably take too much risks. Remember that the trend is bullish, so not necessarily. You're against the trend. So by just the fact that you've missed some gains, you want to aggressively sell the market. But the second mistake is that you think this is inevitably going to happen. Let me tell you, you might be left behind because there is a reasonable probability that we do this. And we fuck it all out, because if you follow these things, we had the third range boundary already, which means you took your profits. Sometimes the market will go higher, but the next stage, okay, remember this thing is a step sequence. It's a set of things that happen in a specific order, which allows you to navigate it efficiently. Now that we had the third range boundary and that you took profit, the next stage is this. It's getting the resistant context falling below the flat or falling moving average, okay? For now on, the moving average is still rising. That means we need to get below it, and we need to flattenish until we get the bearish context falling below. So we could very well do it straight line. And I see some people saying, yeah, no, we're of course going to get a third range boundary. No, it's no guarantee. In here, we could definitely fuck it all up. There's a likely possibility this happens. There's no way for you to know which one will happen. If the third range boundary happens, fucking yes, trade it, and I'll be the first one to do it. If it doesn't, don't come and complain that the market didn't give you the opportunity, okay? It's just, it may go down in a straight line, and if it does, then no big deal. Let the market retrace and take the next trade, okay? The market may leave you behind, and I know how painful it can be to feel like you're left aside from the market and others are making gains and not you. Don't look at the others. It's the number one mistake in trading. To think that some others are making gain and not you is the most painful sentiment to ever live by. And it leads you to making the most stupidest mistake in trading. And trust me there, I've done it before. So I know you'll do it. It's just try not to fall for it. Okay? It's essential for you to follow your guidelines. What you have is not perfect, but no one has a perfect strategy. And the people you see on social medias and Twitter shit like that, they're generally hiding the losses and showing and over-arguably talking about the gains. So you have that stupid assumption that lots of people are making gains and never making losses. That's not part of trading. I mean, frankly speaking, I've seen this guy come and go all over the time. None of them has ever lasted more than a couple or 5 years at best. So if you really want to be trading for the duration, don't listen to these guys. I mean, they're noise. Just fuck them, okay? Anyone who has less than 5 years provable experience in the market, don't even listen. What the fuck is that? So frankly speaking, you're making yourself more pain than anything else by listening to these kinds of guys. All it does is introduce these kinds of feelings. So very dangerous one. I would like it to restrain that one. Second thing that I see now is in the crypto market. So remember the crypto market, we were trading two things. Bitcoin only. We had identified the likely probability in which I told you, trust me on that one, but I gave you the rules. Like we had a beautiful Wyckoff pattern, which I said, if we try to do a spring, which is breaking the bottom of that range, I'll buy out. And I'll take the profits when we retrace down to the top of the range, where normally speaking the sign of strength happened, which is some kind of a range which breaks to the upside and terminates the pattern. So that was my assumption. I partial profit take here, put the stop at break even when we reach the market top, and I hopefully get a bullish breakout out of this. And that's all there is. But that was not necessarily part of the strategy. Remember, Wyckoff isn't something I teach you. It's just something that when I see it, I try to teach you. But don't try to overthink it. It's really a psychologically driven pattern which has some fundamental technicals, but the variability is too high. So if you're experienced enough, get to learn Wyckoff. If you're not, well, don't take too much risk on it, okay? Anyway, this one I shared, and it played out perfectly. We've gone to the target, take some profits, and now the stop is at break even, and we're nearly going to be taking it off, okay? I very well guarantee it will. And we've talked about that, actually. We said, don't call it a guarantee. That doesn't mean the pattern played out nearly perfectly for 90% of the time, and it failed at the end, that you got it wrong. Remember, anything you see in trading that is all about being right or wrong is a mistake. That's not what you should do in the market. You should just risk manage your way in. Okay, so in here, it was right all along until you got it wrong. So once again, if you didn't profit take in here and you have your stop at break even, you may lose all your gain. Yes, but did you really took a tremendous amount of risk? No, you did your job. You did exactly what needed to be done. And if it had to be done again, I would do exactly the same. That means you don't know what this trade will deliver, but out of a 10 to 100 similar kind of trades, it can only be profitable. And that's the only certainty you have in this chaotic environment. You don't know what this trade is going to be out, nor the next one. But out of a 10 or to 100, the statistical trade play out. And this is where the magic happens, not in a single trade. Always remember that. Anyway, for Bitcoin now, we had another volatility alert, and out of breaking this sign of strength to the upside, we broke it to the downside. And now, of course, chances are we're going to go for the Bollinger Band. And we've talked about that this trade might be taken down at break even, and you very likely had to do it. And if it were to be done again, I would do exactly the same. Remember that there's also another thing. We are in flow number 2. We had the 3rd range boundary, which means we're there. Okay? Next trade is to trade the Bollinger Band. The lower Bollinger Band only. So here it is. That means you could be stopped out and still you would have to take another trade at the exact same area. So how stupid that is. Well, you could tell me, well, then I would rather like to keep that trade rather than taking a stop and trading again at the same level. That would be absolutely stupid. Well, don't do it. Remember, these are 2 separate trades. There's one that is a Wyckoff stuff, which has a pretty damn tight stop loss, because remember, when we break the bottom of that range, the spring just can't go to infinity. It has to fake out and retrace in. So that's basically all there is. In here we had a tight stop loss. In here the stop loss is going to be different. Remember that out of these things there is a clear set of rule. It's a maximum 2% risk that you take, okay? And the size of your stop loss will be the size of the trend channel. Bare minimum. That means the trend channel here is your bare minimum risk taking. Okay? So the side of the trend channel in here is pretty much halfway through the context. So this is the side of your minimum stop loss. Here is where your limit trade is, meaning that you don't try to catch the bottom, whatever shit like that. You put your limit orders at the Bollinger Band, standard deviation, period. So here you are. Minimum stop loss would be something like that. Okay, that's the size of the trend channel. Okay, so that's the minimum stop, somewhere around 50 to 51K. Okay, the maximum stop loss, okay, is the bottom of the previous flow. So now you know the maximum stop loss is 25K. That's pretty damn fucking far away, because I generally tend to tell you in ranging context, don't try to risk more than you could gain, which means in here, your minimum gain is to validate the context, go right back up to 74K. So that means for a 1-to-1 ratio, you would have to set a maximum stop loss at 41K. So your stop needs to be somewhere minimum like 46 and maximum 40K. Okay, so that's all there is. And now anything you do in between is okay to me. You follow the guidelines. That means you know where the maximum stop is, you know where the minimum stop is. Try to figure out your way into this. That's just how simple it is. Okay, don't make it overcomplicated. Don't try to catch the bottom or whatever. Just account for the fact that anything can happen there. You could have lower shadow candles, whatever shit. Don't try to predict the market. Just apply the goddamn rules. When it says Bollinger Band, trade at the Bollinger Band. Terminated. The maximum risk is 2%. And decide how much you want. Remember that there is a similar pattern exactly playing out in Ethereum. Same 4-hour context, same 4-hour mature range in here, and same lower Bollinger Band to be paid out. So there's the same strategy with 2 heavily correlated assets. So you're free to take 2% on both. I would tend to say that might not be the smartest choice to make. We very likely will know that both have somewhat very high level of correlation. So you might be taking 4% risk out of the same kind of trade. So I would tend to say kind of split out between the two, but I would definitely recommend trading the two, not just taking one out of the other. Two will multiply the changes, okay? So Ethereum, same strategy at 2,900, and with pretty much the same thing. In here, you would see that the risk limitation is better, because in here to 2,900 level, you would take a stop loss that is barely like 50% of the context, okay? So that would be something like that. That would be 440 points. So in here, minimum stop loss is 2,400, let's say. And in here, as you could see, the 1-to-1 ratio, the maximum stop loss would be going somewhere there. Okay, maximum stop loss would be 1,700, which is pretty much the bottom of the second flow. So as you can see, in Ethereum, your risk limitation is much better. Much, much better. So that's the reason why I think ETH is a better trade than Bitcoin now. For the same kind of context. So I would tend to say I would probably personally expose 2% ETH, 1% Bitcoin. That's slightly above 3% for two very similar trades. But I think Bitcoin has a lower chance of success and certainly more like a lower chance of reward in this pattern, as this one offers much safer stop losses. Okay, so that's all there is to me for these two guys. Now there is another final tricky question I would like to answer, because I've seen many people making full of shit statements regarding Solana, and I'll do it again. Some people think that I have something against Solana for whatever reason. It's just this is where I see the highest level of stupidity and psychology, and therefore this is where I see the biggest amount of psychological mistakes being made. Remember that what I'm teaching you here is how to use statistics and try to get away, as far away as you possibly can, from these kinds of psychological assessments, which are nothing but subjective mistaken stuff. That means basically whatever it is that you feel like others are making in and you don't, or whatever, things like that, is not part of the strategy. So try to make it easy on you guys, okay? I'm going to take a quick example to demonstrate how painfully wrong some of those statements that I've seen on Solana are. If you go to the monthly chart in here, remember that's the basic thing if you want to trade 4-hour sequencing flow, because I've seen so many people say, yeah, exactly. So I have my orders on Solana at the Bollinger Band. The fuck are you doing? Really, what the fuck are you doing? You are applying flow sequence that says low risk area, time frames +3. That means the bottom of the sequence must start out of a low risk area 3 time frames above. Now let's get into it. Okay, let's apply the goddamn rules. Solana monthly chart. Okay, here we are. We were there at the bottom. Okay, so put yourself into context. What did you have back then in the monthly chart? Absolutely nothing. No fucking thing. A thing that's gone up through the roof and then retraced 97% of it. This is not a range. You don't even have a context at that stage. Moreover, if you're deleting that thing to go into real time, okay, what you end up with is this. Look at where the bullish context is. It's at 0. We're not going to touch this level anytime soon. So make it easy on you guys. So long as the context is here, there is no way for you to trade the range, because this isn't a range boundary. You need to get to the context. The context is at 0. So certainly you would say retracing at 12 was so painful. Yes, but not enough. In the current market conditions, Solana needs to go to 0 for me to buy it. In the monthly context, okay? Of course, monthly will update. By the end of that year, we'll get a new context, and we're very likely going to reverse it. So the situation on Solana may improve by next year, but we're still going to have to get to that support context. So there's no way for you to trade the monthly. And if you're trying to trade the 4-hour sequencing when there is no evidence of a bottom in the monthly chart, you're doing some stupid mistakes. So be very cautious with that, guys, okay? Because from now on, what we have with Solana is the best we can do, because the monthly chart clearly says there is not enough data for us to trade. The context is so asymmetrical, which means that thing could either worth $200 or 0. And it's pretty damn fucking dangerous to make any other assessment. So not being able to do monthly, we're going to do the best we can. We're going to go to the weekly chart. And the weekly chart doesn't say no trend. I'm sorry again, look at the context. There is no trend. This thing has just been rocket shipped to the upside, absolutely stupidly destroying 97% of it afterwards. So bullish to bearish. It's just stupid stuff. So all we can say for sure for Solana is the best we can do out of this is not to trade the trend. So if there's no trend, the best we can do is a range. So we range trade that thing. So we put the fibs, and as you would say, bam, here is a big fucking sell for Solana. So I see some people being bullish on Solana. I hard sold it at $200 and I have been profit taking. I gave you the target at the mid-range 125. It's been taken, which means I took this trade and I'm done. Now the rest of it, I don't nearly give a fuck. The only thing I care about now is that we haven't gone above the resistant context, so there is no pullback, dumb pullback. The next trade here is another range boundary in here at $60 below the support context. The support context is rising, so this level might go higher, but anyway, the minimum for me to buy will be $65. And that's all I know. I don't buy Solana until it goes $65, period. Anything else you do is in your head. The strategy is clear, neat, and simple. Whatever I just said in here is written black on white. It's been there, written for years, for everyone to check and verify for themselves. So once again, I'm here to teach you those rules. Whether you believe them or not is none of my business. You shouldn't believe it. You should try and test them for yourself. And if you try and test to verify, you would see they work just fine. And these rules in here says no buying until $65. There was a nice, clear evidence sell at $200. So when you guys try to convince yourself that Solana is bullish, for whatever bullshit reason you might think of, I say the opposite. I think this thing isn't going to break $200 anytime soon, and the next buy is at 65, and that's all I'm going to be doing personally. Anything else is none of my business. That doesn't mean it won't happen. That just means I don't care. To me, anything else is chaos for Solana. Okay? I have no monthly range, so the best I can do is to trade the weekly. The weekly is so chaotic bullshit that I put my fibs and I blindfold on, take the dumb trade strategy on. The next trade is 65, period. Termination. To me, that's all there is. The trade at $200, I was trading against every fucking one in this party. And I was right. We've gone down to the mid-range, took my profits, period. Now I'm moving to something else. I don't care about Solana anymore. I don't know where it's going. All I know is that it doesn't raise any interest to me so long as it doesn't go $64. Period. Now you can do anything else. You can raise yourself all the things and say, whoever the fuck is this guy? He says bullshit. Everyone is on to Solana, blah, blah, blah. Oops, sorry about that. Okay, so it's really plain simple, and it's working exactly for just as many of the other shit tokens, which we mentioned repeatedly in the weekly charts, the COSPAs, whatever, and the like. They're all absolute full of shit kind of systems, though be very cautious with that. There is no technical viable strategies for them. They've gone through the roof for no reasons, and they can destroy it all without any prerequisite. It's just chaos. And I see some people trying to blend in all sorts of things, like this asset is the future, or just look at how many gains people are making when you stupid folks say, stay away from it. No, all I'm saying is your rules are clear. They say stay the fuck away from here. So if you're bending the rules for any reasons there is, to try convincing that you need to trade this thing, when all the rule says we're in the middle of the DOM zone, let the DOMs trade. So that doesn't mean you smart, they're dumb. That just means you respect your rules. Whatever they do is none of your business. You shouldn't listen to anyone else but yourself and your rules. They are what they are. If you don't believe them, that means you haven't studied them enough. I don't ask you to believe me. I ask you to trust the rules for yourself. Test them yourself. If you feel this fear of uncertainty, like, yeah, others are making profits or whatever, and I don't, maybe I'm outsmarting things by following the rules, maybe the rules aren't essential. Well, if you think that way, there is a lot of progress to be made. Because, like I said, So many people do those mistakes, and I did them in the past as well. Learn it the hard way, that there's no other way around but to follow those fucking rules. Anytime you set aside of it, you go back down to chaos, which is basically trading in the middle of nowhere for absolutely unreliable statistical reasons. They're generally mind-driven. This is your own mind trickling you into doing what you wanted to do in the first place, and trying to figure out whichever argument is going to support that thesis. We've studied it in the psychological mismanagement stuff. It's an unbearable amount of stress for your brain, and it's going to figure out any fucking rational way or irrational way to get you out of this stressful situation. The only durable way to do it in trading is to use mathematics and statistics to get you out of this stress, and to say this stress isn't rational. I don't need to do something. I just need to review my rules, get the same old fucking conclusions, and get the hell out of here. Not getting in because I feel like whatever. No, you feel the stress, rationalize it, and move on. What makes you rationalizing it is a set of rules. And just like I said, I just apply them to clearly demonstrate that there's nothing for you to do on Solana. If you're trying to get yourself convinced the other way around, I don't know what you're using, but it's not part of the strategy. Okay, guys? So wanted to make it easy. There's so many other assets in here who are not following the same guidelines. And I know you think exactly the other way. If you take AVE, for example, you've got the monthly range in here. Okay, you can clearly see the boundaries in here. We're not having a disappearing kind of context. So we do have something here. We know that the average thing of that is possibly a range. Okay, so did we touch the bottom of the range? Yes. So can we search for a flow sequence on AVE? Yes. You can trade that one. It's been going to the bottom of the range. You can trade a 4-hour range sequencing in the AVE chart. You can do it because the rules in here are met. It's the same thing for Atom. You want to trade Atom? We've gone through the bottom of the range in here. The context in here are not just like between 0 and infinity. So everything is fine. We've gone to the bottom of that range. And that's all there is for you to know. We're trading at it right now. I mean, we're so close to the bottom of the range. So in here, a bullish sequence of flow in the 4-hour reference could very well happen. And yet, you're all entirely convinced the other way around. You're like, yeah, Atom is going to 0, blah, 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 and Solana is going to infinity. That's just crazy shit, folks. Statistics says exactly the other way around. And if you try to convince yourself the other way, well, like I said, you're falling for psychology. That means whatever you do is chaos. We don't know what the future is made out of. Statistics can't predict the future. I'm not saying I know what the future is, and AVE and Atom are going up and Solana are going down. All I'm saying is I don't know, but I'm never going to do anything but following the rules. So if Solana goes up and Atom goes to 0, so be it. If I had to do the same choice over again on different assets, I'll do exactly the same. Buy the one that's at the bottom and sell the one that's at the top. And there's one thing I can tell you for sure, is that I've done it for nearly 15 years and it works damn fucking well. It can't predict whatever is going to happen with this asset or that asset, but I would do exactly the same if I had to. So that's the difference between so many people I see out there and those who will successfully trade over decades and durably. That means ones are using statistics, and it's not overconfidence like I know the future, whatever shit like that. It's not. It's just that I follow some rules. Rules that I've been guided myself for more than a decade now. And I haven't changed those rules to follow whatever sentiment I have at the moment. These are the immutable rules that I'm using consistently over the years. These are the rules that I've written down clearly for any normally constituted human being to be able to read and apply themselves. All I'm doing here is trying to teach you those rules. I'm not trying to convince you that I'm right and the others are wrong. So that's really all there is. If you're not convinced enough that those rules are legitimate, that means you need to work harder. You don't need to trust me. You need to verify those rules yourself. And I'm going to leave you guys with that, but I wanted to state that one more time very clearly. It's not such a thing as gambling your way into the future by betting it all on a bunch of assets. It's just that statistics speak for much more than these 2 or 3 assets. And if you follow them, and if you spread out the risk, you're going to do fine. It doesn't matter if this asset makes it and not this one. There will always be statistical randomness in a pattern. You can't predict what's going to happen out of 10 trades, but out of 100, there's no way you can lose money. So long as you get yourself exposed to 100 different trades following the same rules, and you verify those rules for yourself, you know that the chances of losing out of this are 0. or close to zero, because zero doesn't exist. But the reality in which you could lose your money into following those guidelines is so close to zero that we consider it to be zero. Of course, non-zero chances never exist. Okay, so that's really all there is. You could still lose it all if everything blows up and we end up World War III. Yeah, certainly the stock market entirely may disappear. So once again, there are chances this can happen, but they're as negligible as chances for you to be struck by lightning. And therefore, what do? Do you stay home to get away from the chances, minimalistic chances of eventually get caught and struck by lightning? No, you don't. You know this is possible, not zero, but you don't give a friggin' fuck. And you live normally. That's exactly what I do with trading. I could definitely lose it all. Chances are non-zero, but I don't nearly give a fuck about anything that is chaos-like. I don't think about one asset or another. I just apply the goddamn rules to any asset that would have similar structures. It's all there is. There's nothing personal, folks. I know so many of you think of it because some people have made gains on Solana and I don't because I bought Atom and Aave. All I'm saying is, yeah, present me the same chart, call them otherwise, and I would do exactly the same choice. There's nothing personal with that. So it's really all there is, okay? Wanted to state that very clearly. I hope you understand it now. I'm going to leave you guys with that. Bye-bye.